How significant is the founder in your decision to invest in that business?
Pose your question slightly differently, which is how important is the management team to the success of the business? In my view, it's the single most important thing. The leader and leadership team, for me, is the single most important investment decision we make. So much so that we built our whole firm around that single premise. We bring in our own management teams. We train them from right out of MBA programs. That's the fundamental foundation of our whole investment strategy. And I think that that's something that a lot of investors really underweight because it doesn't fit nicely in a spreadsheet. You can't run data analyses on it. It is somewhat subjective, although we try to make it as scientific as we can. But a lot of people say, yeah, management's important. Yeah, talent's important. But then if you actually look at what they do, where they spend their time, they're focused on all the financial metrics. But for us, right, I think it's the single most important thing. We figured that out about 12 years ago, that was the most highly correlated factor. We weren't even looking for that. We were looking for purchase price, industry, growth rate, return on tangible invested capital, all the stuff that you read about. That's what we were looking for. And we actually found something we weren't looking for, which is actually it was the quality of the CEO every time. There's this awesome quote by Charlie Munger, and he says, the first rule of compounding is never interrupt it unnecessarily. What that has meant for us is, cut your weeds and water your flowers. So if you have a good company and a good management team, give them more resources, more people, more money, more time, and mostly don't sell it. Keep going with that business. Because what most people do in my business, in private equity, we have to raise a new fund every few years. And so if I want to go raise my next fund, the easiest thing for me to do is sell my best companies and then give money back, show these great realized returns, and then go raise more money. But that's actually the dumbest thing I could do because those are the flowers that I want to be watering. And I think having that mindset for us has been a complete game changer. And as time goes on, more and more of our businesses are those flowers. There's this expression, pigs get fat, but hogs get slaughtered. In other words, don't be too greedy with your good investments. Sell it before you lose money on it. That's the worst investment advice I've ever heard. You want to give more energy, money, and resources to your best things and hold them for longer.
What are some indicators that you're dealing with a great team? How do you vet that?
Yeah, good question. I think one of the things that we believe to be true that not that many people agree with us on is that the attributes of someone matter more than their experience. Experience is kind of obvious. Okay, we're going to invest in a company that was a healthcare company in the software business. So then we need someone who's been in software for 20 years and they've run a healthcare software company. When most people would be looking for that CEO, that's what they would be looking for. What we believe is that the attributes of someone are actually way more important. Who someone is more important than what they've done. So we're going to be looking for things like, do they have grit? Have they demonstrated persistence in their life? Are they people who have emotional intelligence? Is this someone that would inspire followership? Is this someone that people would want to go work for? Those are really our most important criteria. And we found over time that those criteria are way more correlated to successful leaders than the experience. They start below the person with experience. So they're going to start off in the first year, they're going to be worse because there's a big learning curve. But then after probably a year, certainly after 18 months or 2 years, they just pass that experienced person who may not have those attributes. And then they just keep going from there. So that's kind of how we assess leadership.
Their initial values, their attributes, and as their skill sets catch up, their value compounds.
You can teach someone the healthcare business. It's hard to teach them grit. It's hard to teach them the will to win. It's hard to teach those kinds of things. So we want to find people that score really high on those attributes, and then they can learn the business itself over time.
That's incredible for founders and their teams to even listen to, especially when they're looking for investment. A lot of the other firms are so financially driven that they really don't highlight their team. So what advice could you give a founder and their team when they're looking for investment to kind of differentiate as a team?
I read this book a long time ago when I was raising Alpine. I was having no success at all. I had very little track record and I was trying to promote my little dorm room track record. That was like my pitch. And this book said, people buy the salesperson, not the product. And I remember thinking, whoa. So in my case, the product was my track record, which really wasn't that impressive. And then the salesperson was me. And so I really shifted to kind of start to sell more myself, meaning like, here's my vision, here's how I'm going to approach it, here's some ways I've approached challenges I've had in my life in the past. And that was how I was able to get the first fund raised. And that's something we actually teach in my class is like, okay, let's say you are raising money for a venture investment in your company. Let's actually talk about how you sell yourself. And we have this process where you make a list of, we call it an offense deck, where here's the key things you want to be hitting about yourself. And we have a defense deck, which is like, here's the reasons they're not going to invest, that you got to like present and actually be on your front foot about those. The defense deck is the thing that probably entrepreneurs miss. They forget that they actually want to talk about the reasons why someone's not going to invest, because if they don't talk about it in the meeting, then they're just going to get the phone call and says, hey, we didn't invest because you didn't have experience. Instead, what I want people to do is say, I know you're probably thinking you don't want to invest because I don't have experience. Let me tell you why that's not or why you should overcome that. And then they get to put their spin on it rather than have that happen behind closed doors.
Because if they don't mention it at all, it could also maybe in your perception be that they haven't even thought of this potential objection and maybe
Exactly.
blind spots. If they talk about it, it's like, oh, this person is self-aware and they understand that we're probably thinking this.
My line I used to say, you're probably thinking that I'm a 25-year-old who's only bought 2 label printing companies in my dorm room, and why would you invest? And I remember the people are thinking, yeah, that is exactly what I was thinking. And so you gain a little credibility just by like naming the elephant in the room sometimes.